Welcome back to the FreightWaves Supply Chain Summit. I'm John Kingston, the editor of large at FreightWaves. I was thinking that maybe we should do a contest as part of this summit to figure out what supply chain got most impacted negatively by the pandemic of 2020. Auto parts, maybe, restaurant supplies. There's lots of contenders, but I think that one of the industries that most certainly would have to be on the very short list would be the supply chain that supplies the oil fields of the U.S. and Canada. It's an industry with plenty of small to mid-sized companies that bring frac sand and water and all sorts of parts out to the oil field. Oil prices before the pandemic were high enough to support a U.S. industry that still could produce 13 million barrels a day of oil. That's a record level. But that was followed by a pandemic-induced collapse in the price of oil that at one point on the key commodity exchange, it only lasted a day, so it didn't really have a lot of big impact, but it was still so notable. The price of crude oil, the price of West Texas Intermediate went negative. So our guests today on this fireside chat at the Supply Chain Summit are two men who lived it very closely. I'm joined by John Esparza, who is the president of the Texas Trucking Association. He has many members of his organization that were impacted by the declines. I also have with me Bob McDowell. Bob is the owner of W.M. Dewey and Son, Inc. They are a long-standing company that serves the oil patch in Texas. Bob tells me their corporate history goes all the way back to 1895. So both of you, thanks for joining us today at the Supply Chain Summit.
Thanks for having us.
Okay, John, I'm going to start with you. You've got a lot of companies in your organization that call a lot of things. How big is the role of oil and gas in the Texas Trucking Association?
Sure, John. To give you an indication, the Texas Trucking Association has been around since 1932. Years ago, a couple of decades back, because of the division of oil field in Texas and the trucking behind oil field and supporting oil field, there used to be an organization as big as if not bigger than the Texas Trucking Association back in those days, the Texas Motor Transportation Association, if that's a mouthful. It was called the Oil Field Haulers Association. So a few decades back, these two large organizations merged and became what is inevitably the Texas Trucking Association today. So when we look at the makeup of our association and the industry, frankly, in Texas, it is a large, it exists largely because of the oil field industry, and there are many sectors even within the oil field that populate the amount of freight that moves across the state of Texas, of course.
So why don't you talk about those days? Let's go back to, let's say, January of last year or late January, early February, when news of COVID-19, of course, I don't know if we called it back then, but news of the virus was starting to impact us. And, the price of oil began to teeter. And then in the first 2 weeks of March and into April, it absolutely plummeted. Have you ever seen your members been hit that quickly by anything like that?
Well, I think it's safe to say that there was a certain degree of unprecedented that we have witnessed and haven't seen in some time. But I will say this, and Bob, being here with Bob today is a reminder to me, early in my tenure here, Bob had shared something with me that was companies that have been around a long time. They don't get too excited when times are like this, and they don't get too excited when times are great either, and that's just been cyclical with the industry. It's a tight ellipse of ups and downs that you have to endure that don't necessarily track the economy, and I think that's also something that I've learned over the years. It is an unprecedented effect to the industry, but I think while we're all talking about the pandemic and have been, now since that time. You're right to mention that West Texas Intermediate was taking a great fall, and we were having two events that were going on simultaneously. Once in dealing with the pandemic, and the other, of course, in seeing what was happening in the oil field and its impacts on companies like Bob's and numerous other companies across the state, especially in the Permian Basin, are dealing with Houston and the Permian Basin, that we're seeing the ill effects of two crashes effectively.
It came on so fast. Did you lose a lot of companies that just disappeared? They just could not handle the shock of that all at once?
John, I've been here now 15 years, and I cannot tell you a time where I've seen the amount of of if just what I look at in terms of dues revenue for our organization, the amount of members we represent, how many notes I have on invoices for renewals of dues that said, I'm sorry, John, we're going to shut it down. We might try to come back in October, but we're closing the doors for now. And this was in April, May. Some of those companies have not made it back.
Interesting. Okay, so let's go right down to the ground, Bob, at your company. First of all, why don't you talk a little bit about what Dewey does?
All right. Well, we are a flatbed trucking company. We primarily just haul all-field pipe to the rigs and terminal to terminal, but mostly it's to rig locations. And so you can imagine how demand dropped. We had 683 rigs working in March of 2020, and by June it was under 200. So you can imagine the drop in demand for our services when the rig counts dropped that much in that short a period of time. So it was a very, very severe downturn for us.
Right. Let's note now that the rig count is solidly above 400, I believe. In fact, I got a note yesterday. The inverse rig count's above 400. So there's probably only so much you can do to support your customers. You're probably not that big a creditor compared to certainly the banks. I mean, this is an industry that is absolutely dependent upon debt financing to operate. But what were you able to do, if anything, to kind of support your customers and help them get through it?
You know, in downturns, everybody's trying to cut costs. And so immediately there's a pressure on adjusting your rates for them that they require. And so many of them, they just didn't have any work, so they weren't even calling us. So we didn't have to do anything for them, but there wasn't any work from them. So the ones that were still around, they required, to adjust your rates. Even if you hadn't gone up in your rates for a long time, they still needed a further reduction. And that's what our competitors were offering them. And so we have to meet the competition. And our rates had not even gotten back up to our 2014 was the last strong time. And in 2019, our rates hadn't even gotten back to the 2014 rates. And yet then we had to cut rates another 10, 15%. So.
Yeah. Are rates in your business of per mile just like they would be with a dry van? I thought maybe some of the hauls might be a little bit shorter, so maybe the pricing was different.
Right. You have a minimum, but it's basically a per mile rate.
So what else did you see your customers doing to take steps to survive? Obviously, they were asking you for lower rates, but were you, at the end of all this, I hate to say the end of it because we're not over, but I think certainly the worst is over in terms of the oil patch. Did you see a lot of them take steps that when it was all over, you look back and said, wow, they survived. I wouldn't have thought that. They did a great job. Or did you just see a lot of them, kind of like John said, just disappear?
Well, yeah, there was a lot of bankruptcies in oil companies. And then a lot of our work comes from our pipe supply companies. The oil companies buy their pipe from the supply companies. Well, there's a lot of failures and consolidation of those pipe supply companies. And then there's also been a change in that pipe mills are now offering to carry customer inventory and handle all their logistics to the rigs. And so you're working for a lot of your old customers, but they're all having one source control all the freight. So you're dealing with fewer companies that have more power on rates.
Do you find in this business, as somebody who services it, that even when a company goes out of business, the rocks are still there, the reserves are still there, and somebody else just comes in and works the field?
Well, the oil field is all about opportunity, and so it's all driven on price. And so when oil prices come back up, they work those oil reserves. It all comes back around. That's how you get that peaks and valleys.
Now, your company had assistance from an outside source. You got a PPP loan. And, the PPP program, I covered it. I wrote a lot of stories about it for FreightWaves, very controversial. But, when you get past kind of the ones that are the big ones that make the news, you're still dealing with more than 5 million loans that went out to individuals, and in many cases kept companies alive, kept people working, or kept people employed at least. What did you do with your PPP loan? What was that process like, and how much of a lifeline was it?
Well, it was extremely important. And, as a family-owned company, and we feel a sense of obligation to our employees and how many families are dependent on our company's survival. And so we saw that, okay, we can keep these people working and have the money to keep paying those salaries. So it was a lifeline for us and for our employees. And I don't know if we'd be here without that, or we would be a much smaller company.
John, is that a story you heard throughout the TTA that a lot of companies use PPP money to stay alive?
Absolutely, and I think that's it was a lifeline to get through a very tough time. And there's still a lot of uncertainty out there, as you know, and a second round of PPP. So we're hopeful that companies that are still struggling can take advantage of that, and that is something that will keep them afloat. Historically, when you have companies and the ellipsis of ups and downs that we see throughout the industry, it is, when I look at the numbers and the amount of freight that moves to this state, and it's increasing. The amount of the population in the state continues to increase and increase. When you see that relative to the accidents and the fatalities in the state of Texas, we're proud that number is getting better and better and better for trucking. Our biggest threat are the companies that come in these opportune times as they see them, throw a trucking company together, equipment that is subpar. We've seen it. We work very closely with the Department of Public Safety and see what happens, and try to undercut companies like Bob, companies that are doing everything right and have the people and the provisions and the equipment in place to do it at not a substandard safety, but above average. We're threatened by companies that in this environment and in a deregulated environment can come in, start a company, but aren't doing things right. And those are the biggest threats, I think, to an industry that we have, that we, as an association, we work. As Bob said, we've got a lot of small companies in here. We have safety certification courses. So we know that it works, that if you're an honest broker and you want to get out there in the equipment world and you're going to start a trucking company, we can help those companies by showing them what those standards are and helping them be successful as a company.
So after all this, John, let me ask you again from your perspective as the head of a large association, what is the health of the oil patch trucking industry in Texas? I mean, they've been through a huge downfall. Many of them have got PPP loans. The price has rebounded back up. It's not yet completely where it was before the pandemic, but it's certainly getting close. The rig count's up. What kind of state are they in? Maybe they benefited from a lot of other companies disappearing. How's their health?
Well, I think the healthier ones are looking at opportunities with companies closing to grow their companies, acquire equipment. Those are opportunities that present themselves. As you know, there's a limited amount of capacity out there, and it ebbs and flows where fleet companies utilize independent contractors. So there are opportunities in times like this for companies that are healthy, clearly. There's indicators out there that we have, mutual friends of Bob and myself, that move rigs for a living. And when we see a flourish of rigs that begin to stack, we kind of get an idea. And I certainly can tell, that's not a good thing. When we're stacking rigs against a fence or in a yard, they're going to be down for a while. The industry, the oil and gas industry, what we've also noticed is when the price per barrel gets to about 35, 30 and below, they start shutting down. But they don't necessarily open back up when it gets back up to 30. You're looking at more closer to 50 when you see that shift of progress. And we're starting to see that, as you've mentioned. So that's a positive sign. And we hope that companies that have been able to survive are taking the opportunity, which a lot do when they're not moving, to reevaluate their equipment, take a look internally, retrain. This is a time, and tough times are times to look internally at your company and catch up on things that you're able to catch up on.
This is an industry, as I mentioned earlier, that's very heavily dependent upon debt. When you look, and when I say this industry, I'm really not talking about the trucking industry. I'm certainly talking about the upstream oil and gas industry. There's been a lot of debt taken out of the industry. A lot have been bankruptcies. As I mentioned before, the rocks are still there. What's your optimism? Is this a much leaner industry going forward, that they've got a completely different cost structure than they may have had even, let's say, a year ago?
Well, I think these times make these companies stronger. They learn from these opportunities. Going back to my comments about Bob early on when we got to know each other, companies that learn and live through these times become stronger, become more efficient. They don't get excited when things get rough, and they don't get too excited when things are good. Don't go spending all your capital when you can, and certainly do what you can to help keep people on staff. The time will change, and as it does, the company that has the advantage is the company that was able to keep their employees on board. They're not looking for drivers where everybody else is looking for drivers. Companies that are successful are the companies that take care of their people. They understand that the people are the fabric of the organization.
Well, speaking of keeping on drivers, Bob, let me ask you, one thing I think that I've always heard about operating in the oil patch from a trucking perspective is that you've got, finding drivers is always a challenge for everybody. Some of these oil plays are not all that close to a population center. I think certainly out in the Permian, you're closer to Midland, Odessa, but the Eagle Ford can be quite away from some of the population centers near Corpus Christi or San Antonio. What is the situation for hiring some of these drivers that need to go out into the field, long way from home? Is it a particular problem for the kind of industry that you're in?
No, it's the action is in Houston or Midland, Odessa. So that's the center. So that's where you hire from. That's where the loads originate, and so and our rates are a little bit higher because there's not a lot of backhauls from the Eagle Ford, and so no, it's you hire in Houston and you operate out of Houston. It's out and back, and that's just the nature of our market there.
So what do you think, when you look to your company, do you think you're now in better shape for the next crisis? Or, as both of you have mentioned, this is like, the cycles of commodities, up and down. You're always prepared for this kind of thing. But do you, Bob, do you consider your company maybe a little bit different, a little bit leaner, more ready to go for the next crisis, whenever that might be?
Well, we're definitely leaner, but to really get ahead, we've got to have more drivers, and it's just so frustrating. We have tried everything. We offer all the benefits. A company-owned fleet, the drivers are our employees. We have all the benefits they could want, a weekly guarantee for them. We just cannot find applicants to get in the door that we would hire. And we do have hiring standards, pretty strict, and that's why we have all these safety awards, because we're very safety conscious, and that starts with the quality of driver that you hire. But we just can't get anybody in the door. It's very, very frustrating. We've got to build our driver fleet to build our revenue.
I'll ask this for both Bob and John. How concerned are you about some of the steps under the Biden administration that they're signaling on fracking and leasing on federal lands? Bob, I'm guessing you mostly service private lands. But I could be wrong on that. How concerned are you about that contracting business opportunities going forward? John, we'll start with you.
Yeah, I'm very concerned, frankly. You talk about state of Texas being primarily privately held lands, but you look at where the state is positioned geographically, serviced by a number of ports, the Gulf of Mexico, the amount of increase in trade traffic. Texas, in its position, there will always be a through port for the rest of the country. Our value is into the shipper that can efficiently and effectively move freight through Texas, as opposed to our neighbors to the east or to the west. So because of those reasons, we will always see, even if we weren't the 12th largest economy in the world, even if with the amount of freight that will continue to come through here, it is a dire concern when you talk about limiting oil and gas production in any areas of this hemisphere, frankly, that feeds through the state of Texas.
Bob, how concerned are you?
Well, you know, there are a lot of unintended consequences of government legislation or regulation, but from the standpoint of the markets that we serve are not on federal lands, and so if they restrict drilling on federal lands, it may mean the price of oil goes up and the activity on private lands would be more in demand, and so that's the markets that we serve. So from a selfish standpoint, that might not hurt us as bad, but for the country, I think that can be detrimental, providing oil at reasonable prices for the public.
That's always the unintended consequence. That regulation tends to favor those who are already in the business and really put the crimp on startups.
Yeah, but you know, it depends if you were serving offshore, and that may be detrimental to them, to that market. It just happens that we serve primarily the Eagle Ford and Haynesville and North Louisiana.
Okay. We want to thank John Esparza of the Texas Trucking Association and Bob McDowell of WM Dewey. I was about to say MW Dewey. I'm sure I wouldn't have been the first one to make that mistake.
Right.
For joining us today on the FreightWaves Global Supply Chain Summit to talk about life in the oil and gas sector, particularly the oil patch during the pandemic and in the months after that. I've been your host, John Kingston. I want to thank you for joining us and stay tuned for more of the summit.